2020 has seen extreme market conditions with the lowest lows followed by the highest highs, and the American Federal Reserve propping up the stock market with printed money. My name is Marco, and today we are looking at 5 tips to make money in these extreme market conditions. And so the first tip is to not FOMO in, instead cost average in. It doesn't matter if you have read about stocks that are incredible bargains, or you have heard your favorite YouTuber talking about stocks that you have to buy. Do not let the fear of missing out take over. Instead, divide your pot of money into chunks and invest periodically, as timing the market is almost impossible. And you see, even my favorite investor, Warren Buffett, has failed to time the market. In 2020, he sold his airline stocks for a loss of just $3 billion. And he's a kick-ass, black belt, legendary investor. By the way, this strategy implies that you don't pay any flat fees for buying and selling stocks. And if you live in the UK, a trading platform that doesn't charge any fees for buying and selling stocks is Trading212. And if you open an account using the link in the description below, you will get one stock valued up to £100. I will drop the link to the full review and account opening tutorial for Trading212. The next tip is equally important, and it's that you should invest money that you can afford to lose. This is particularly true if you go for risk investments like penny stocks and options. I can't stress this enough, as 2020 has already seen the heartbreaking tragedy of a guy who took his own life after a failed investment. Please let this be a reminder of how risky and serious investing can be. Which takes me to my next tip, which is make sure you understand if you are investing for the long term or the short term. As a rule of thumb, if you can stay invested for more than 5 years, then you should relax and not look at the short-term fluctuations of the market. Investing is still your best option, with saving accounts offering next to nothing and a potential high inflation around the corner. You know, the whole printing money out of thin air ordeal. And if you cannot stay invested for more than 5 years, then do not make risk investments with more than 10% of your net worth. And this is because there is a particularly high uncertainty in the market due to the illness everyone is talking about. And as the US is in the process of opening up, there are already talks for a second lockdown. Some companies like Apple have already closed the doors in the most affected areas, which is very bad news for the investors. So as a bonus tip, and if you want to take it to the next level, you could keep an eye on the number of new cases. You can find this info on Google, and I'll leave the link in the description below. The next tip is to test your attitude to risk. And by this I mean, can you sleep at night knowing that your investment is down 40%? That is not too far-fetched, as that happened to me and many other investors at the beginning of the year when the market crashed on everyone. I admit I wasn't happy, but I stuck with my investment strategy and I managed to make a fat 18% profit with a broad ETF. Can you live with that? And if you can't, then reduce the amount you invest. Remember that you invest to live and not live to invest. Before moving to the next tip, I want to give a shout out to Money Mom. She talks about saving and making money, as well as making motivational videos. Go check her out. The link to her channel is in the description below. And so the next tip is to practice before investing real money. And by this I mean to practice paper trading with your favorite apps. And I've read the Webull offers that feature. If not, you can do it on TradingView for free. And in the case you want to try options, which I would not recommend as it's like gambling, you could practice by gambling the minimum and see how that goes. Remember that 2020 has seen crazy and borderline outcomes, like the share value of bankrupt companies going up. I'm obviously talking about Hertz, and most of the time the actual share value of companies that have gone bankrupt is non-existent, so I would avoid them like the plague. Hey, did you like these tips? You will find another bunch of them when you click on this playlist of short videos that I created specifically to learn all about investing from zero to hero. Which tip did you prefer and why? Let me know in the comments below and I will answer all of them. Thank you for your attention and see you next time.